So let's get started. This is the first chart we wanted to talk about. This one is from Yahoo Finance, and it shows the S&P going back to about the year 2000. At the end of the graph here, it looks like a small drop compared to where the market was over the previous years, and people are still seeing big net gains over the years, right? So why do we see so much panic every time we have a significant drop?
Well, I think it's an easy answer, and I think when we ended our conversation yesterday, I said we're probably going to have an up market, or I was hopeful for an up market today. That surely didn't look like that at the opening this morning. But let's talk about first what happened today and then why people feel the way they do. You had a lot of volatility back in the market over the last couple of days, and back and forth today, which told me a couple of things. One, people were taking profits, the institutions. And secondly, I think the machines were at work. So based on what I have seen yesterday, today, particularly, and the last couple of days, it would not surprise me that if the SEC is now taking a very different look at this and seeing what was causing this, maybe not conducting so much of an investigation because that takes resources, but at least looking at an initial analysis. When markets drop, I quoted my grandfather yesterday who used the word agito, which is really have an upset stomach. And when the market drops a couple of hundred points, you're going to have a lot of agito. But let's put this in perspective. The market was down up until yesterday 8%, 8.5%. I also said yesterday that an economist's correction of the market is usually 10%. So I don't want to worry people, but I'm not sure we're out of this. It's like a bouncing ball. The ball is starting to have less of a movement, but with a bouncing ball, it's going to take time for it to settle down. So we don't know where when that settlement will take place, or if it will take place this week or next week, or if it's going to spike again for some reason. So we have to look at it. But if you are an investor and not a speculator, if you take time with your portfolio, I think the markets will respond and be back up again. I mentioned yesterday that since World War II, there were 113 corrections of more than 5% in the market on any given day. Every single one of them, the markets have gone higher. I was on the trading floor of the New York Stock Exchange during October 19th, 20th, and 21st, 1987. When the market on October 19th was down 23%. The market's only down 8% here on one day. We're down 23%, and I said yesterday that many people felt that was going to be the end of the world. It was not the end of the world. And if you look back over those 30 years,
Rich, I want to go back real quickly to something I want to go back to something you said real quickly about the machines being at work. Now, I have an investment account. I can go online and say at Fidelity, and I can set a stop loss margin. If the stock falls to a certain price, I can automatically have it sold, right? But this is taking place on a much larger scale for these institutional banks, right? They have these algorithms and stuff that predict these things, and when the market starts to fall, there will be a lot of sell-off based on this. So explain to me a little bit more, and for the folks at home, what you were talking about when you said the machines may have had a hand in it.
Sure. When markets move down particularly, there are protocols put on these computers for selling individual stocks or baskets of stock, groups of stocks. And what happens to some extent is a cascading effect. So this group of people sell, and the markets, certain levels of the markets hit a certain point, or certain stocks hit a certain point, and then other people sell, and it becomes kind of a snowball effect, cascading effect. And I think to some extent that's what happened the last couple of days. You've also had I mentioned yesterday that, and I want to give him the credit, that Mario Gabelli said there was a lot of money on the side, but it wasn't providing good liquidity. People were not buying in at those high levels. I think you saw people buying in today, so that liquidity was in the market, and we're seeing volatility in the market, the intraday market volatility that we really haven't seen in probably more than a year. So should you be concerned? Of course you should be concerned. But if you are an investor and not a speculator, look at the percentages and look where the market is up. The broad media has been talking about the Trump slump. This is Trump's fault that this has been going down. Well, just a couple of weeks ago, they wanted to give Obama the credit for the 42% rise in the market since the election. So they can't have it both ways. If you want to blame Trump for this 10% slide, then he should get the credit for the 30% that we saw last year, or 32% that we saw last year. Actually, 42% because of less the 8.5. So the media like to like to make these things very dramatic. It is important, but the issue is the underlying fundamentals of the American economy: earnings, job growth, the low levels of unemployment that we haven't seen in 17 years, and so on and so forth, are in place. Clearly, we have not yet seen all of the relevant issues coming out of the tax incentive. People are starting now to see that additional money in their paychecks. And as I said yesterday, they're going to be doing a lot of different things with that. They're going to be buying televisions. They're going to be using it for childcare. They're going to be using it for all sorts of things that are a need to them. And that money is going to flow back into the economy. And as I also said yesterday, if we can put together a major infrastructure bill of $1 trillion or so, not only will I be able to drive home on good roads in the evening and safe bridges, but this country will create an enormous number of jobs, not only in the infrastructure business and the construction business, but all the aligning areas of all the service business, from accounting to legal to so forth, that will flow into that $1 trillion. So I think America is on a good path. I believe in this country. I believe in the market where we are now. And I predicted yesterday that if we're sitting here in December, the markets are going to be significantly higher than they are today.